I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood from Cycles News and Views on CyclesMan.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, we always wonder how big of a role currencies play in the markets right now. What's your view on the U.S. dollar?
Well, I've learned, the same as it has been. We've been bullish on the dollar all year. And I maintain that stance. No doubt about it. I want to, shifting gears, I want to come back to the dollar, but shifting gears to equities and paint the big picture here for a minute if I could. I've learned to never say never, and I've also learned that nothing is for certain in this business. But this is an extremely dangerous technical juncture, and short of a market miracle or some extreme measures, the market's in a position now where the unwinding has the opportunity to begin. It can certainly turn ugly here. And like I said, short of another market miracle, I think that's probably what we are going to see as we move into 2019. At this point, I think it's only a matter of time as to the path it takes. And, for that, we have, the cycles work and stuff to guide us that I cover in my letter. But that said, I think it's pretty well, I don't want to say carved in stone because, like I said, I've learned to never say never and there's no certainties, but it's virtually to that point. And with that said, I kind of wanted to review everything and for the year and kind of set us up for going into next year.
Well, okay. So, let's get our review going.
Well, back to the dollar, starting there, the surprise, and I think that's how we termed it early in the year, that the surprise for this year would be the strengthening of the dollar, which, we did find the 4-year cycle low in the dollar in February, and, we may be at some short, possibly even intermediate term, approaching an intermediate term top in the dollar, but the dollar has been up in association with that 4-year cycle low, so everything there has been spot on. And at this time I see, other than corrective activity in the dollar, I think the strength in the dollar is going to continue. As we moved into this year, gold, there were some concerns, questions about the 4-year cycle top and the 4-year cycle low. Did the previous low occur back in 15, or were we going to get another push down into the low? And, I was optimistic that maybe we would get the push down into the into the 9-year cycle low early this year, and then gold would be in a position to rally. I really wanted to see that. But then the other scenario played out, and evidence told us that no, the 15 low was the 9-year cycle low, but we'd also seen the 9-year top. And that top finally occurred in April. And since then, gold has moved lower. It's been soft. It hadn't just fallen apart, but it has been weaker, and it is closing negative for the year. We've had an intermediate term bounce for the last couple of months, but I don't think it's going anywhere. I think it's counter trend, and we go lower, just like anticipated. Looking at, the CRB, we talked about commodities. As the dollar bottomed, gold top, we thought, the commodities would also move into a 3-year cycle top. That top was seen on May 22nd, and at the recent lows, the CRB index is at 15-month lows. So that too is right on target. following that top in May. We were looking for the top. We knew that crude oil was obviously going to follow the CRB, but it didn't want to give in. It was resilient. We had a high in May, and then made a slightly higher high back in July, and then we made a slightly higher high in October 3rd to be exact. It just kind of bumped along the ceiling there as it rolled, and now we're sitting at 13, 14-month lows in association with that 3-year cycle top. So that one's right on track as well.
We'll have more with Tim Cyclesman Wood right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, when it comes to the equity markets, what kind of cycles have we seen, and what are we being set up for?
Well, like I said, the stage is pretty much set, and I think the fat lady is probably going to sing pretty soon. Looking at the industrials, the S&P, we're now flirting with negative close on the year. And I say flirting, it's negative as we speak. Obviously we got a couple of weeks left in this year, so, maybe it gets a bounce, but I'm not so sure about that. We also have, as of now, we have a negative close on the American Stock Exchange, the New York Stock Exchange, looking at some of the foreign markets, the DAX. That's pretty much a done deal. I mean, it would be a miracle to get that thing back above, the January, open. The CAC, the FTSE, the Stock 600, which is a broad European index, the New York World Leaders, the Dow Jones World Index, the Canadian TSX is set up to close with a negative, in the red for this year. The Korean Kospi, on and on and on and on. So pretty much as slow as this process has been, everything we've talked about is falling into place. And again, granted, equities have been somewhat of the holdout, primarily the S&P and the industrials. But these other things, like I said, they have been our leaders as far as equity markets. Everything we was looking for with the dollar and commodities is in place, and equities, I think, are going to be the next domino to fall. And, like I said, I think as we move into 2019, we're set up for it to get quite ugly. It's a matter of the path it takes, in other words, exactly how it unfolds. For that, we have the cycles, that I cover in the letter and the short-term updates. And, I've hardly ever plugged my letter or anything here, but I'd like to say, I did a really in-depth, big picture, overview and painting the expectations a couple of letters ago, and I urge people to possibly take a look at a subscription and get a hold of that information, because this really does have potential finally to unwind.
We'll have more with Tim Cyclesman Wood right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, crude oil, it was decent around $70 not that long ago, now down into the 50s. What's your look at crude going into the new year?
You know, like I said, I think the longer term stuff is broken. I think we go, an intermediate, shorter term bounces. It's just a matter of the degree of the bounce. But I think overall we move lower.
Do you have any numbers in mind?
No, not at this point. It sounds a little crazy. But I think we could approach the 16 lows potentially. I need to get into this next. There's some cycle lows coming in. I need to get into those lows before I can realistically get any better projections. But I do think that it is possible that we could approach those levels.
And that was what, down to?
Oh, it was right just below 30.
I was going to say $29 or something like that.
Yeah, somewhere in there, 27, 28, 30, yes, in that range. I think that potential is on the table. But like I said, I can get some better projections once we get into some lows just a little bit ahead of us.
Now, is this purely cycle stuff or looking at political news out there? What do you use when you come up with numbers like that?
It's purely cyclical. And that's some of the information that I'm talking about that is in the letter. And I don't mean to go back to sounding like a salesman, but I lay it out in some of these letters. You know, there's been, for example, there's been 6 long-term economic cycles since 1800. And I show in one of the letters where we're at, what we're facing, why, all the ifs, ands, buts, and what the expectations are. And then once you see, methodically go through the data and see it, then it makes sense. But no, I think we're facing a major unwinding.
Our market historian Bob Hoy points out central banks were invented to help prevent recessions and depressions, and yet since the U.S. Fed was created in the early 1900s, there's been something like 19 recessions or depressions. How effective are these central banks in fighting what you call natural business cycles?
Well, that's interesting you bring that up because, back in 2000, this has been going on for 18 years. I mean, it's been going on longer than that, but in recent history, it's been going on at an unprecedented level, I guess you would say, for 18 years. The deflationary forces and the unwinding tried to begin in with the 2000 top. And we saw the reinflation that was largely driven around monetary policy coming out of the 2002 low, which created the worst financial crisis since the Great Depression. We've talked about that. And that was based solely on liquidity. All throughout that extended cycle, I said, it's only making matters worse. It's only making matters worse. It's only making matters worse. And it proved that it did. Well, since the 2009 low, what have we seen? Even more of the same practices that created the worst financial crisis since the Great Depression. That, combined with this 6th economic cycle, I think it's a disaster. I think I think they can manipulate, extend, and that's what we have been facing. That's how we got here. Due to those policies, they have extended this cycle, this bubble. But it's air under it. It's not. That's what I've tried to say all along. Is that it's not organic, and it's not sustainable. So I think we have an even worse bubble. And like I said, now we're in a position where we face the unwinding, and the cycles are in a position where they're rolling, and it's just a matter of the path that it takes, how quickly it comes unwound, and how good a job they can do at stopping it. One thing I've noticed, it's not just me. I mean, it's obvious. A friend of mine tells me he's reading tweets about it, and other technicians are talking about it. every time you see this market get in kind of a critical or technical spot, short-term spot, you see them attack it with news, to try to manipulate. I mean, trust me, they know the position of this market and the consequences that we face from this unraveling, and it's being tried. They're trying to hold it with every means possible, and it's going to come unwound.
Tim, with this unwinding, what should you do to protect yourself?
And I don't want to give anyone specific advice, but, I think just like we saw nobody wants to hear this, but just like we saw in 2008 and 2009, what happened? Everything went down together, including gold. And that's what I've been saying here, that I was optimistic that maybe the cycles would set up to where this time we would have a 9-year cycle advance in gold as everything come unwound. But it didn't work out that way. We lost that opportunity this year, and now, unless something changes, something oddball changes, we're set up for, just like we were back then, for everything to go down together. And like I said, it's just a matter of the speed in which it comes unraveled and how good a job it can do at keeping it together at this point. But the stage is slowly being set, and I urge people, if you want to see some eye-opening data, it's available in letters with hard facts, and you look at it, like how you deny what you can see with your own eyes.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. If you have any questions for Tim or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.